Good afternoon and welcome to GrainTV. It's December 18th, 2013. To my right is Cody Bills and I'm Brock. We had a negative day across the grains in Chicago. Let's turn to the live quotes to see how we ended. Corn was down just 1 3/4 cents. Soybeans, the leader to the downside, reversing a trend that we've seen recently, down 22.5 cents. Wheat in Chicago, Kansas City, and Minneapolis all making new contract lows today. Wheat in Chicago was down 7 cents. Kansas City following along, down 6 3/4 cents. Something to note here on the board is that the dollar index was up sharply today after some announcement by the Fed. Cody, why don't you break down what we heard from the Fed today and how did that affect the markets?
Yeah, absolutely. The FOMC minutes came out, and really one of the main things that was highlighted here is that the central bank said that it would reduce its monthly asset purchases by $10 billion down to $75 billion. Really what this does is it really signals a change in the way the Fed is approaching monetary stimulus. It's going from a full steam ahead approach really to now how do we unwind. And one of the things that they mentioned is that the asset purchasing program here where they're purchasing treasuries and mortgage-backed securities should be wound down by the end of next year, and they said certainly not by the middle of next year. So I think that's being priced into the markets here today.
Ultimately what we want to know is how is this going to affect the commodity markets. This information came out after the grains were already done trading. We saw a dollar index trade up sharply as a result. We saw the equities trade up sharply as a result. How do you think this is going to play out in the commodity markets as we open up tonight and a little bit longer term than that?
Well, the response to me was a little bit perplexing, but I think one of the things, I think the dollar really benefited from this as a result simply because of that change in mindset. Quantitative easing has really pressured the dollar down. It devalues the U.S. dollar, and I think that change in mindset, now focusing more on how do we get out of this thing, is one of the things that we're going to have to focus on going forward, and I think that's why we saw the dollar rally. When you look at equities, I think there are some other positive things that helped equities move here. They also announced that inflation and unemployment rates were expected to be higher, and they also mentioned that interest rates are expected to be kept low for longer periods than even previously forecasted. I think that's one of the reasons why we saw equities end up rallying here. On the whole here, if you look at commodities markets, I think wheat in particular is going to be affected by this most, since it's most sensitive to the currency exchange rates. We saw the dollar rally sharply. I think that's going to make U.S. wheat a little bit less competitive on the global market. One thing that also came out today, we saw a trend in ethanol production here in the last few weeks, really the last month or so. Very strong ethanol production. We got ethanol numbers out today. Brock, what did we see?
Once again, that was supportive for the corn market, although we did back off just a little bit from where we were last week at the yearly high last week. We moved down by about 16,000 barrels per day. If we take a look at this chart, we've been following this marketing year. You can see the weekly production here is that last red bar. Where we were last year at the same time is the black line here. You can see we're well above where we were last year at the same time for pretty much the majority of this marketing year so far. This week we were averaging 928,000 barrels per day, so very good daily production there. Stocks also moved up by 177,000 barrels. That puts us at about 15.63 million barrels on the ethanol stocks. Heading out towards the end of the year and into January, we should see a little bit of a pullback in ethanol production. That's just kind of the seasonality of ethanol production as a whole. So we should see it pull back here just a little bit in the next coming weeks or so.
So that seems to be expected. Now tomorrow, export sales come out. Demand has really been a major theme here in the last couple weeks, and obviously ethanol production continues to be very strong. Now export sales here coming out tomorrow. What's expected by the market?
We're expecting another pretty good week of export sales for both corn and soybeans. Wheat continues this trend of sliding a little bit lower. If you take a look at what the analysts are expecting here on this table, you can see that corn we're expecting 550 to 750,000 metric tons, soybeans 700,000 to 900,000, and wheat about 300 to 400,000 metric tons. So roughly in line with what we've seen over the last couple of weeks. If you recall last week, soybeans we did see exceptionally strong sales, so we were looking for that to continue with just about 800,000 or so metric tons being sold in the export market.
Well, we'll be looking for those export sale numbers. We'll hopefully send it out in the morning commentary. If you have any questions about what we talked about today, give us a call at 877-472-4607. Remember, we have a mobile trading platform now at GrainHedge, and if you're interested in taking a look, take a demo at grainhedge.com. Thanks a lot for tuning in. We'll see you tomorrow on GrainTV.